Over the last 72 hours, Bitcoin experienced a violent liquidation cascade, dragging the price from 65,000 down to 58,000. But if you look under the hood at the base network while this chaos unfolds, you find a complete contradiction. The underlying transaction fees haven't reacted at all. During that 96-hour stretch, tens of millions of dollars were completely wiped off the board in a brutal, cascading long squeeze. The derivative market heat maps point to an absolute bloodbath. Yet examining the underlying network data reveals a stark anomaly that defies the panic. Understanding the difference between derivative market noise and true fundamental network signals is exactly what separates emotional traders from data-driven investors. To see how this happened, we first need to understand liquidity leverage. When traders stack dense, highly leveraged long positions in a narrow price range, it creates a massive top-heavy block of capital. That cluster becomes a highly profitable target for market makers to hunt. This heat map displays the market on June 21st. Notice the purple transitioning into a bright yellow leverage band around 64,800. This dense cluster acted like a gravitational pull. See the price wicks dipping directly into that yellow pool, harvesting those positions. Fast forward to June 24th, and this updated heat map shows the resulting destruction. Look at the cascading red price action dropping straight toward 59,000. This violent move vaporized the lower liquidity bands, leaving an empty, dark space where millions in long positions sat. This multi-day crash was a purely mechanical function of clearing out over-leveraged traders. It was not a rejection of the asset's underlying value by long-term holders. While the social media sentiment was entirely bearish following that price drop, the physical hardware running the Bitcoin network tells a completely different story. This dashboard tracks live fundamentals. In the chain security section, 90-day hash rate sits at an enormous 959 exahashes per second. Panning to Lightning Network metrics, total capacity remains highly elevated over 4,600 Bitcoin. Reachable nodes stay robust above 24,000. With hash rate peaking and node infrastructure expanding, a minor capitulation is highly unlikely. The actual engine of the network is completely ignoring the derivative price action. To see if a price move involves actual coins moving, we look at block space fees. When investors sell physical spot Bitcoin, they must move their coins onto an exchange, a process that creates immediate competition for block space and drives up transaction costs. Back on the dashboard's mempool section, despite a $5,000 crash, the median fee is completely flat at 2 sats per vbyte. There's zero urgency. In the predicted next block section, fees make up a microscopic 0.08% of the total reward. This combination of a severe price drop and zero fee spikes shows the move occurred via paper contracts and off-chain derivatives, not physical spot selling. So with this glaring divergence between the paper price and the network's reality, where does the market go over the next 7 days? Let's check the macro view on this dashboard's supply section. With over 95% of all Bitcoin already issued into circulation, the physical scarcity of the asset is mathematically locked in. Because the physical supply is constrained and the derivative market has fully reset, we have to look at where the new leverage is building up today. This latest heat map reveals the current price action and the newly formed leverage bands sitting directly above it. Notice these dense yellow bands clustering in the $62,000 to $63,000 territory. These function as a massive magnetic force pulling on the current price. Since the downside liquidity was thoroughly wiped out, the path of least resistance has flipped. The highest probability outcome is a violent squeeze upward into those new bands to clear out the fresh short positions. The paper market successfully shook out over-leveraged hands, but the underlying Bitcoin network didn't flinch. Keep a close eye on that $63,000 liquidity band.